Hello and welcome back to the Velocity channel, where this is your bridge to financial freedom. Listen, we are going to talk about the 10 most costly mistakes people make and how you can avoid them. Listen, without further ado, let's get started. Before we do that, I want you to like, share, and subscribe so that everyone around the planet can know just how powerful velocity banking is. Now, first off, one of the biggest mistakes we see is not understanding the concept of velocity banking. So it's not just about paying off your loans faster, it's about strategically using your money to maximize your cash flow and minimize your interest payments. What do I mean? I'm so glad that you asked me that question. We're going to go ahead and take $12,000 of your line of credit, right? And then we're going to go ahead and knock off $40,000 worth of interest payments. This could be your house, right? This could be some sort of gargantuan loan. Listen, what people don't understand is when they chunk the principal, this is how much they can save off of chunking the principal. $40,000 in interest. Remember, we showed you that in the mortgage example, plenty of mortgage examples, right? Plenty of car loan examples. There are other examples as well. We want you to know that there is a reason why you're taking that massive amount, right, out of the line of credit and putting it towards the principal of the loan. It's so that you could save this much, right, in interest. We want to cancel that interest as much as possible. All right, step 2. Now listen, the second one is that many people, they fail to use their credit lines effectively. All right, you remember in our last video, Velocity Banking, how to pay car loans with credit lines and get rewarded? Well, it's crucial to understand how to leverage your credit lines to pay off your loans even faster, and then on top of that, get rewarded in the process. And you can do that by doing a similar example. All right. Number 3, not all loans are created equal, right? Some loans are more beneficial to pay off quickly than others. So it's important to prioritize your loans and pay them off according to what? No, not the interest, according to the cash flow index model. Let's go ahead and get that right now. Now, this is what you're used to seeing, right? You're used to seeing, oh, well, and that one has a high interest rate, so let's go ahead and pay that one off first, right? But wait a minute, what about the minimum monthly loan payments, right? What about those minimum payments? Okay, this is supposed to actually be a 500 right there. There we go. Right? They both have the same, right? We have the $10,000 balance here and the $5,000 balance here, right? We have different interest rates, don't we? 10,000 at 20%, we got 5,000 at 10%, right? The gurus are going to tell you, hey, let's go ahead and pay down the highest interest one. But is that the best thing that we want to do? I'll leave that to you. $500 is our minimum payment on both loans, all right? However, according to the cash flow index model, what we're going to do is we're going to divide both, and we're going to come up with a number that's going to tell us whether we should pay off this loan or that loan first, okay? We're going to make sure that we get our loans in priority. So let's go ahead and do some canceling out here. We have the cash flow index of 20 for the $10,000 loan, right? And then for the $5,000 loan, let's see what that one comes out as. Okay, this one is a 10. Okay, actually, we're going to go ahead and pay this one off first. Why is that? Because you want to make sure that you're freeing up the most cash flow possible relative to the amount. See, you're paying too much relative to the amount that you're getting over here. So we want to make sure that we're getting rid of the cash flow sucking loans so that we can use that cash flow to what? Get rid of more cash flow sucking loans. It's just going to show you which one you should have in priority. All right, let's go to the next one. Yes, the 4th point. Not setting a realistic map. Money allocation plan. That's a common mistake. See, velocity banking requires discipline and a clear understanding of your income and expenses. Now, without this map, you might end up overspending and not having enough to cover your loan payments. Now, a map, it simply looks like this. Groceries going to be $500, car is going to be $300, dining out is going to be $600. And just do that. Now, listen, if you don't have an automated solution, I feel for you, man, right? Because this is much easier and much more simple. Just put it in, right? The expenses, the income, the debts, and then out will come an answer. You're going to be paying off your mortgage by 5 years from now instead of 30, right? Car loans, student loans, all kinds of loans done in 10 years instead of the projected 50, all right? So unfortunately, there are people that still don't have an automated solution, but this is the 21st century. And if you don't, you need that tool. And we're actually going to be getting into that later on. But all this is making sure that you have your soldiers assigned, right? These soldiers, these 500 soldiers, they're assigned to the groceries. These 300 soldiers, they're assigned to the car. That's how you got to look at it from this point forward. Next point. Now, I know a lot of people are down and out because their credit score. But listen, we know that your credit score can affect the ability to get credit, your loan, blase, blase, blase. But when you know how to pay off your loans, you're actually better at paying off the loans, and you'll save more than somebody with a 740 or even an 800 because you know how to pay off your car loans, for instance. You know how to pay off your home loan, for instance. There are people with an 800 credit score still paying their mortgage, folks, all right? And listen, pat yourself on the back because you know velocity banking, you know how to pay now, right? So please pass that along to your neighbors, can we? Now, credit scores, they are important, but they aren't that important. So make sure that when you have your credit utilization, that it's under the 30%. I think that you'll be safe with the under 30%. All right, the sixth one is going to be not having a contingency plan. You know, life is unpredictable, all right? It's important to have a backup plan just in case you're not able to make those loan payments. Now, listen, this is what we want you to know, that with the First-Lien HELOC, right? Now, folks, you know about that, okay? You know that with the First-Lien HELOC, you have more options, and that's what it's all about. But even when you're using your line of credit, and that's why we use our line of credit, okay, in the line of credit, you can build in there a buffer so that you have your backup plan right there in your line of credit. And so please don't discount the line of credit. Don't think of it as just another bill, but think of it as a tool that the banking industry is letting you use so that you can have those contingency plans if you don't have one in place that is more advanced, or if you don't have an automated solution like us. Am I right? Listen, number 7, not using the right tools, guys. Again, there are so many tools and resources available to help you with velocity banking, and not utilizing these tools can make the process more difficult and less effective. Let me show you what I'm talking about here. If we look at this, right? Well, let's go ahead and put it within here, right? Okay. Let's go ahead and say you have 500 here. You have the 300 here, right? Let's put the 600 here. Now, these are the calendars, right? Monday through Friday, let's say, okay? And you have a system that's letting you know, listen, if you want to pay off this card sooner, then I'm going to have you put the 500 inside of this credit card at this moment, okay? We're talking about your credit card, let's just say. And then at another point in time, it'll let you know, okay, now we did the 500 last time, but let's go ahead and put 300 in there this time, okay? Now, and for the rest of the week, you're good. Next week, it's gonna see, hey, do you have enough to make this extra payment so that you can make these minimum monthly payments go away so you can pay off these loans, okay? And it'll say, okay, you do. You've got 600. And we're going to go ahead and we want to transfer that towards your credit card so you can pay that card off and so that you can do more things with it. Imagine not having to do this on the whiteboard. Imagine not having to do it, but you're putting it inside of a system that does it for you. That's what the automated solution is all about. And that's what people don't have, the tools. And so this is what I want you to do. I want you to remember that the 8th point is not seeking professional advice. Velocity banking can be complicated if you make it complicated. But if you have someone who makes it simple, it's no longer complicated. That's not complicated, right? And 9th, not being patient. Folks, continue to be patient. Don't discouraged if you don't see immediate results, especially if you don't have that tool that we're speaking of and you haven't taught to us, right? You can do this out on pen and paper, right? On stylus and iPad, you sure can. But why when you don't need to, all right? And of course, last but not least, the 10th mistake is not staying informed. You see, the world of finance is constantly changing, and it's important to stay updated on the latest trends and strategies in velocity banking. You know, some of the reasons why the banks are failing is because they failed to embrace velocity banking. So, there you have it, the 10 most costly mistakes people are making when using velocity banking. By avoiding these pitfalls, you'll be well on your way to financial freedom. Now remember, it's not just about paying off your loans faster, it's about making your money work for you. So keep learning, keep growing, and let's continue on this financial freedom together. Don't forget, always remember to like, share, comment, and subscribe. Until next time, God bless, and you guys have a happy new year.